Hi there, it's Francis, and we're taking a look at the Euro US dollar, and I'm looking at it at the 30-minute time frame. So I'm going to have a little give you a bit of a peek on what transpired before. So there's our, if we see the trend, clearly you can see that we've been consistent capitulation and bear flags, ledges forming down, down, down. So the trend is down here. No surprises there, the news flow confirms, and we got what I would call a gap exhaustion, which often comes at the end of a period of selling or buying. It can occur on the top side or the bottom side. You can see it, weekend, boom, gap exhaustion. We opened, ran right down here, and then we had a little bit of a reaction. The window got closed. So I've drawn these two lines. That there is the top of end of the gap, and that was where the highest point when it resumed trade, and this was the Sunday evening session through to the Monday that this occurred. It made quite a substantial gap, continued to trade down, and then was beaten back, and the window was shut on this. So it was a little bit exuberant, too much too soon. We got our first pullback. So those of you that are familiar with continuation patterns as I trade them, this is a setup I particularly use a lot, and it's very close to a symmetrical triangle. This is of course an inverted one. We're looking for continuation to the downside. This is a low one. I take that low point, I look for where the highest point is that it reacted up to. So this is all quite reactional to the window being closed. A little bit of follow through momentum, a second chance to get up there, and then it died all the way back down. It died quite far down and almost got as low as the low 1 point, giving us that low 2 point. Then weak trend, little bit of a last exhaustive effort, giving us a high 2 there, and then it came down with quite strong momentum. That point over there, that just gives us our third low after excuse me, our second high. Our final high is up top here, and represents the second high, or the third high, my apologies, for this pattern. We then got a breakdown through that level. You can see that is the breakdown. Smashed down, ran to the first interim target. That comes from the width of the funnel. That's the relative high 3 to the relative low 3. That's there. Don't get confused. These gap levels I've extended through, and you can see how they sit inside the funnel almost perfectly symmetrically, and that the midpoint of the funnel runs right through the middle of the gap as well. So there's roughly the middle point of the funnel between that high and that low, and you can see how it also splits the gap very perfectly, and I've pulled it all the way through there. So that's why there's a lot of lines over there. It might get a bit confusing. So that's your short entry there. That was your first interim being made, and a pullback up to the midpoint. Actually went slightly past the midpoint, slammed back down, made the second level interim, and then also reacted, as it often does after a target level was made, and bounced around, sat on that first interim for support, poked through, climbed back on, sat on it again, fell through, formed a pennant, classic pennant, down leg and pennant, and then reasserted to the downside. So has this finished? Because we've got hammers here. Is it coming up? Is it over for this setup? Well, I don't believe it is, because the final target is here, and that's from the midpoint of our pattern. That comes from there, and you can see how it captures the high one to the low one. That includes the gap down. More interestingly enough, it's a very symmetrical setup. So if I do a Fibonacci retracement from the hammer low on the Sunday evening, then to the Monday morning gap closure, up to its highest point that it managed, note how the 61.8% line virtually perfectly captures, and this is becoming a very busy chart now, the midpoint of that gap, and it runs all the way through, and is also the midpoint of the funnel breakdown. The 76.4 over here also captures our entry level short, which is also very interesting confluence, and the 50% line captures the top end of that gap range. So we're seeing confluences here with the two gap levels, the midpoint of the entire setup, the funnel, and also the entry level where we would have gone short. Most interestingly enough is the 161.8, my apologies, target extension over there, runs us down to the full target as well. So 121.55 is our full target, 121.54. So I'm expecting this to go at some point around and down through this price point, and once it's taken out this level, it'll take it out probably just run the 121.50 level, so probably get into the 121.49s, and then there will be a more protracted period of bounce and progress decay. Progress decay just means it ceases to go down single-mindedly. In other words, been giving us money. It might congest, it might pull back, it might mess around, but largely it's not moving, and we don't want to be in a listless market. So that's what will happen. That's my take on the euro. We did draw this pattern quite a while ago, and I shared it with my blog when we were up top, in fact my students, sorry, at the London Academy of Trading, when this was first setting up, somewhere over here. And just not had the time to capture this, but it's performed very nicely, and we've seen the fibs come up, so you're getting this quite late in the day. Is there a trade for you? Well, the honest truth is, if you're not in this trade already, you've missed most of the action, to be fair, but we will see a run through, I believe, probably taking the 121.50 level out, but I would be out at the 54s, 55s level, the 121.55s. So that's my take on the euro. Further downside, but then after that, choppy sideways. So don't be entering short once we've run the 121.50. It could be pullbacks. It could be a bit listless for a while. Look forward to updating you further. Hope you enjoyed that, and we'll speak again soon.